Elegance is a beauty that never fades. Goodness is an investment that never fades. Our guest for today represents both. Mrs. Radhika Gupta, CEO for Edelweiss Asset Management Company, on the sets of Market Insights from the Diaries of CEO. I would want to welcome you to the show of CEO Diaries. Thank you for being here and thank you for giving us your wisdom. August 2023, Forbes magazine came out with a verdict. The verdict is out, and women are better investors than men. It covered a lot of scenarios which actually disclosed how women are into investments and all. If we see the S&P 500 also, the companies that are managed by female entrepreneurs or female CEOs have actually done far better than the men. I think, if I'm not wrong, till about December 31st, the ratio was about 8.2% better than the others. So something on the lines of those that how do you see in finance world especially, there's still some hesitant for females to actually take up to more bigger roles or bigger responsibilities.
See, I think it's a journey in the country's evolution. There's no question that, and I don't think women in general have to live up to the standard of being better than men or better investors than men. I think they have to be good at doing it, and women are very good investors. I think in this country, I always say कि जो घर की grandmothers or mothers होती हैं, they have done a wonderful job of being budget keepers, managers, savers of homes. And we are a country led by a female finance minister, right? And at some point, a lot of the country's banks were headed by women. So I don't think they need to take this great pressure of being better. I think there just need to be more of us, and it is a gradual evolution. I truly encourage every woman to go out there and get involved with the family's finances, because one, I think they have all the ability to do it, and second, it's not difficult. If you can manage a home, if you can manage a family, if you can manage your workplace, then this is one of the things that you can easily manage. There's a lot of help out there to do this, and thirdly, the family needs you to do it, because finally, when we look at finance, goals are not individual goals, they're goals for a family, and when a family plans to get together, you do a better job. So I hope more and more people encourage women to go out and do this.
How have been your journey? One key, key element or crucial stage that you would want to, probably share with us.
So I don't think there's no crucial stage, because I think journeys are a little bit like investments. They're compounding, right? And there's no one project or job or day that really changes your life. I think what you see is the evolution for most people of any change, any progress is the result of a lot of time and a lot of hard work. And I think that's really been my answer. That give give things time, uh, take opportunities as they come. But whenever an opportunity comes, I think give it your best shot. And what you see as a 20-year career journey is 20 years of compounding in action.
Your recent tweet that covered on the NRIs outside India, what do you want to say more on that?
This was which tweet? Okay, you'll have to remind me.
So I'll quote it, and I wouldn't want to go wrong there.
Yeah, I don't want to go wrong also.
So this was about now is the era of the Indian dream. Let's
Yes,
keep it at it.
Okay. So I wrote this tweet when I was sitting in the US, and I was at a conference, and
Yes. Milton's, yeah.
Milken's conference, and it's sort of the Davos of financial conferences. And Elon Musk was there, and he was speaking about the concept of the American dream, which has been a very popular phrase and ideology and belief in the US. And I looked back to myself, and I was speaking later the next day about India, and I said there is something called the Indian dream. In today's era of India, the Indian dream is that you can be in a small town outside Nagpur and yet dream of building a business and listing it on the National Stock Exchange. You can go abroad to study like I did, and yet choose to come back to India willingly, as opposed to the India of 20 years ago when marrying an NRI was what was the fashionable thing to do. So I think there is a concept of an Indian dream, uh, that we live in India where each generation can have a better life than the previous generation. That regardless of where you come from, if you have a dream in many different industries, it can come true. So that was my context of the Indian dream, and I hope this idea, I hope we start talking about this idea.
That's a very good one, in fact. But do you think Indians in general are facing an imposter syndrome or a self-doubt syndrome?
No, I think sometimes perhaps we don't value what we have as much. And, if you step outside the country, I think sometimes I tend to value what we have a little bit more. But I think Indians are actually quite the opposite today. I think we are full of a tremendous amount of self confidence about the future. In fact, if you talk to global investors, one of the things that they're just astounded by is how positive Indians are from everything about everything from government and policy to our capital markets to our stock markets to our investing to our infrastructure. It's not that everything is perfect, but I think Indians see a sense of growth and the potential for growth, and that keeps the optimism going. So, compared to the rest of the world, I actually think India is very optimistic and very self confident.
Now on the markets, last year has been really good for the markets. We covered about 50 lakh crores investments into mutual funds.
What is the strategy for Edelweiss if I have to talk about it?
So I think mutual fund is a simple business, and as you said, the industry has grown to 50 lakh crores. I'm sure 5 years later it'll be a 100 lakh crore industry, and I think mutual fund is gaining recognition as a very trustworthy, transparent investment product with a variety of options, something that can suit a retail investor sitting in tier 4 India and can suit an investor that's very large and very sophisticated sitting in Mumbai. So it's a simple business. Our endeavor as a fund house is to keep expanding our product basket, but not expand for the sake of expanding, to run good investment products, focus on delivering consistency in those products, to keep expanding our reach in terms of both our investor count, the number of partners, that's something that's been expanding, and to keep communicating with investors and growing as a brand. Beyond that, I don't think we need to do very much. India compounding will take care of the rest.
So I've seen one of the videos where you said, हम ये करेंगे कि हम ज़्यादा चप्पल घिसेंगे.
Which is absolutely true because there's very little else. I mean, a lot of time is spent in boardrooms thinking about strategy, and there's nothing wrong with it. But effectively, it is about good businesses are about day-to-day execution, especially in India, because there are hundreds of dozens of ideas. Every uncle and auntie has an idea. Every kid has an idea. Really, magic is when rubber meets the road and you get ground execution done. And ground execution, to do it consistently without getting bored, is tough. So, chappal is so.
You've seen the regulators outside India, you've seen the regulators in India, and the last 5 years has been very, very reform oriented, policy oriented towards the investors.
Where do you see this growing?
So I think our regulators are doing a very good job, and I don't think you should benchmark to other regulators because India is a very different country, especially in terms of financial penetration and literacy. And it's important that while markets expand, they also expand while maintaining investor confidence and trust. And I truly believe that the mutual fund industry has got this far because so many regulations have made this asset class a respected, transparent instrument today. So I think industry and regulation grow together. I think regulators are far more technology savvy. They have done a great job in leading Indian financial institutions, whether it is banks or mutual funds, particularly through crisis, whether it was 2008, 17, COVID, and there beyond. And our ask will all, I think, just as a country needs a constitution, a regulatory framework and a sound regulatory framework is very important. And I'm happy to note that some of the things that the regulator is doing are actually first to market in that sense. First to the world, actually, in that sense.
Yes. Edelweiss is also known for its quant strategies.
Yeah.
India per se has not seen too much of quant and algos.
Uh-huh.
Do you see that trend catching up?
So we don't like using the word quant and algo because suddenly when you see quant and algo, it sounds like it's very high frequency. It sounds like it's very black box. We like to call it factor investing, and The idea is that when a regular fund manager, a talented fund manager makes an investment decision, there are various factors he looks at in a company. If I were to ask, someone would say I would look at the valuations, I would look at the quality, I would look at the quality of the company, I would look at the stability. Factor investing just takes these ideas and quantifies them into rules, to numerical rules, and we follow rules. And what factor investing gives you is a sense of discipline in following rules, a sense of transparency in knowing what you're doing. Globally, this is a very large asset class. I think as Edelweiss, between our actively managed and passively managed funds, we would run the largest book of factor-driven funds in India today, and we expect that to continue.
You see trends coming into ETFs, like globally we have commodity ETFs and other various types of ETFs coming on the passive side. You see that basket increasing quite a lot.
I definitely see the passive basket increasing, whether it is index funds or ETF. I'm not debating whether active and passive, one is good or one is bad, and quite frankly, I think that debate is a little unnecessary. But I think passive provides great solutions. A lot of great factor-driven ideas, for instance, exist in passive funds, they exist in active funds as well. Now, I don't know whether commodity will come, X will come, Y will come, because some of that is a function of regulations. Today, we have gold and silver ETFs. We started with gold. The regulator allowed silver. Something else is allowed, then it should be relevant. But the point is not to come out with an ETF for the sake of ETFs. You should actually have things that are useful to consumers, because often too many products also confuses consumers.
As far as Edelweiss is concerned,
Mm.
okay, what will be the next 3 year to 5 year strategy? Because markets are at all-time high. Which are the sectors we are focusing on? Are there any specific strategy that are in place as far as sectors and other things are concerned?
So, look, I mean, of course, in our funds, we will have sectoral views, but for broad guidance for investors, people always ask me this question. And the first thing I say is I don't think India is a single sector opportunity. Some countries are, because their economy is run by effectively one or two sectors. But in India, if we talked for long enough, I could tell you a meaningful story about financial services, and I could tell you a meaningful story about capital goods, and I could tell you one about healthcare, and I could tell you one about discretionary consumption. So I think the opportunities are large and vast, and I think that is the beauty of the economy, that it is multi-cap and multi-sector in nature. Our view on sectors, over 5 years, it's very hard to speak because our views on sectors are dynamic. For instance, we are very bullish on the manufacturing side of the economy, the whole theme around private investment kicking in, capital expenditure picking up. So sectors like capital goods, industrials, etc., we've been very bullish on. We're generally very optimistic about discretionary consumption and the fact that premiumization is going to pick up in India, that per capita GDP is going to move from 2,500 to 5,000. I think financialization is a very strong theme, whether it's lenders and their capacity to companies in the industrial space or new age financial services. So I think India is, in that sense, a multi-theme story, unorganized to organized. Is not a sector, but it's a very powerful theme.
So, which is what brings me to the next question. That there are a lot of thematic funds that have come up.
Yeah.
Over the last 6 months, we've seen every AMC coming up with at least 2-3 thematic ideas. Do we see that also coming from Edelweiss?
So we will do them, but we will do them at a slower pace and when the time is right. We recently did technology. We have a recently listed IPO fund which was launched a few years ago. But we don't want to be coming out with one thematic fund a month, because really it's hard to convince the market that one theme every month is important. When there is a theme, and we try to time our funds. I mean, nobody gets timing perfect. And I can't promise that we'll be bottom of the cycle, but at least we don't want to be top of the cycle. So technology, when we did a Indo plus US combined fund. It hadn't been a great time. Past returns of technology were not looking as attractive as other sectors, so it seemed like the right time. Will we do others? Of course, we will do others. It's unlikely you'll see 10 in 6 months from us.
Okay.
Also, there's been a lot of hue and cry about India globally. And there's obviously a separate issue that is going on the rating of India, and it should be better. But however, as far as the markets are concerned, the FII flows in India have not grown as much as it should have been, kind of noise that has been going around.
What is your view on that?
So I meet quite a few foreign investors, and I think there is a lot of excitement about India. Uh, that said, you have to remember FIIs make decisions in a much larger context. And we've been in a period where interest rates in US were very high and developed market debt and equity returns were very good. Uh, I think capital is being allocated to some extent from China towards India. Either people are allocating capital or they are looking at India very closely. I do think elections is an event that people are watching. Um, and if a regime of policy stability, political policy stability were to continue, uh, I do think you will see a pickup in FII flows. I think what we should be happy, however, is that today the domestic institutional investors' might has meaningfully increased over the last decade. Largely the retail and mutual fund investors. So FIIs come, FIIs go. I think what we should take heart in is that the domestic investor has become a lot more powerful.
One analysis when we do on the multi-cap sides, like large, mid, and small, although they've done well last year, obviously, and some recent corrections happened mid and small. Overall, the benchmarks actually did well. Some of the funds were not able to capture the benchmarks.
Okay.
In fact, most of them
Okay.
on the customer portfolios. I think there is a disparity between the two. Where do you see that growing in? Because if I see the domestic inflows also, especially on the SIP front, about 70 to 75% is on the mid and the small caps that is coming in.
Yeah, so I think the issue has been, if you look at last 1 year returns in the mid and small cap category, in fact, and I think this stuff is hard to time. When I joined the industry in 2017, this was an issue in the large cap category. But today, if you look at the large cap category, particularly over the last year, most large cap funds have beaten the benchmark. Mid cap funds and small cap funds broadly it's a little more challenging. I think you have to realize in an extreme bull rally, which is the one that we've seen in the last 1 year, the rally tends to be broad based and all kinds of stocks go up in this market. Now, funds don't hold all those stocks because they have their own criteria. A lot of funds have a particular quality focus. I think you have to look at performance over a cycle. Looking at 1 year data and saying, oh, this year they didn't outperform, next year they will. I don't know if it serves that much of a purpose. I really think we need to become a little more long term in our orientation.
Gold and silver. In markets of volatility, people are preferring gold over any other market scenarios. Silver also is picking up pretty well. What do you see on the gold and silver side?
So I always think that investors struggle to time gold and silver. We run a gold and silver product, and I say gold and silver can be a part of your asset allocation as a currency hedge. It's actually gold has largely dollar gold has not made a huge amount of money. It's a rupee gold because of the currency depreciation that you've actually seen the returns that people are talking about. So can it be a part of your portfolio? To protect against currency and for volatile times, yes. Will it create the wealth that the multi-cap basket of equities will create? Unlikely in the future, but does it play a role in the portfolio? A static 5-10% allocation, 15% allocation, there's nothing wrong with it.
So, having you on the podcast and on the videos of CEO Diaries, one thing is for sure, there's a separate fan base that you have.
Thank you.
Anything that you want to communicate to the women and the female fraternity in general who are into finance for sure?
No, I think, firstly, thank you. I mean, to women who are in the finance fraternity, I really think there should be more of us. I think this is a great career for women. Don't let stereotypes deter you from being ambitious and making a mark in this business.
Another thing I always notice is people have started, most of the guys that we have now associated with, even the wealth managers and all, have started their career in some of the fund managers post 2008 scenario.
Yeah.
They've actually not seen that market downside, where in 2 years, 3 years there was no performance. Anything that you want to say to the private bankers or the relationship managers?
This is a tough one. I think it is important to become a little more long term in orientation. My worry with the world is that we are becoming increasingly short term in orientation. Uh, 1 year performance, 3 month performance, and investing, and there is always a constant need to act. And as private bankers and wealth managers, you play a very important role. And when you become short term, then the customer also becomes increasingly short term. So I think good private bankers, good wealth managers are the ones who can convince the customer not to act when everyone is telling them to take action, who are a little contrarian in thinking, who have the courage to take bold calls. I think that's what defines a good private wealth manager.
This market, would you say contrarian views or value strategies should be played out?
No, I'm actually not saying that. I don't think, in fact, in our own portfolios in the equity funds, we don't see the world as value and growth. We see companies for companies, and there could be a company that is deeply discounted in price to current earnings, and there could be a company that optically looks expensive, but it has meaningful growth. So actually, one of our principles is that we don't follow these value and growth mantras and classify companies into value and growth and quality. We look at companies as companies.
Global investments. I think Edelweiss was one of the first funds to technical or PMC to start feeder funds and actually got much more recognition with the Greater China or the JP Morgan NASDAQ fund.
Where do you see the global investment trend picking up?
So I think
Or
it's
going?
unfortunately been cyclical, but I think people should look at global allocations as a structural part of their portfolio. Um, if you are investing abroad, I think at a certain level of financial evolution, investing abroad is extremely important because India is not the only game in town. It also protects you from currency. Having said that, you should do it when you understand equities, because when things go wrong in an Indian market, people are a lot more comfortable. When things go wrong in a foreign market, they get a lot more nervous. And you should invest in simple ideas abroad and invest for the long term.
Pearls of wisdom for investors
Also, wisdom for investors.
at this market stage.
At this market stage, I think have realistic expectations. The problem with markets like these is I think the last 1 year returns can really go to your head
Yeah, true.
and skew expectations and also skew behavior. So just have realistic expectations and remember sound investing principles, because remember, mistakes are never made in bear markets. They're made in bull markets and discovered in bear markets.
Thank you so much, ma'am. We had so much insights from you, and I think every one of us is gonna go see the video and get some good insights about how the markets are and what Edelweiss is gonna do change the markets. Thank you so much for
Thank
giving your
you.
insights to us. Thank
Thank
you.
you.